All right. So you still can see my screen.
Yeah.
All right. So for accumulation, all accumulation is so from a strong decline like this right here. Do you see these three red candles at the bottom? Uh, from a strong decline, you see this little blue area right here, this little blue box.
Mm-hmm.
Even though this just for example, like silver, this on the monthly chart, on the what I'm saying, on the higher time frame. But this on this from a strong decline, this little blue area, you see what I just drew up right here?
Yeah.
On a smaller time frame, it's accumulating. So if price is at a discount, it's accumulating like going sideways. It's accumulating a lot of orders. So the algorithm, so the name of the game for the algorithm, like the big money, they trying to get people, as many people as they can on the wrong side of the move. So if price is at a discount, like how they be like buy low and sell high,
Yeah.
you know, everybody else in the world in accumulation, just because they see these three red currencies going down, they are selling at a discount. You see what I'm
Yep.
saying?
Mm-hmm.
So, the goal of a market maker is to, trap as many traders as they can in this little area on a smaller time frame. Once they satisfied it, at taking profit at a discount, they're gonna take price into the intended direction. You see what I'm saying? So it's like, you got sitting on our hands. We know what price it, we know where price is, currently at. It's at a discount.
Uh-huh.
So we waiting for accumulation to build up, waiting. You gotta wait patient. We don't know how long it's gonna take. For some reason, buyers take like an hour or two to, build up after a strong
Mm-hmm.
decline. It's gonna take about 2 hours to accumulate. So you sitting on your hands, you gotta be patient. Once it's done accumulating on pocket options, we catching this expansion up right here. See this? I tried to draw it up. As soon as it's gonna, once it's done accumulating, it's gonna expand. You see this whole blue box,
Mm-hmm.
this whole leg. Say this candlestick like this right here. That push up, we catching that within 3 minutes on pocket
Okay.
options. So you gotta let it build up. You know what I'm saying? So it's like saying, so it's like saying, do it like this. It's like saying buy at a discount, sell at a higher premium. So all we doing, all discount and premium is like saying buy low and sell high. So it's like saying that TV right now is $200. That 80-inch TV, flat screen TV, it's like $200. We bought it at a discount. As price gets higher, it's starting to get expensive. Not that TV like 50K right now. That 80-inch that we bought at a discount. Would you buy a
Mm-hmm.
TV that's 80K or
Hell
50K?
no. No.
Where you could have got it at, for willing to pay that premium price for a TV, and they, like, somebody out there buy it. You know what I'm saying? So it's like, yeah, you got to use that analogy when you look, approach the charts in that way. So same thing for the high. You see this right here, this accumulation right here I drew out. If you
Mm-hmm.
flip it upside down, it's the same setup at this high, this premium high. So it's like this. Let me do this with the field. You see at the bottom of my screen it says field retracement.
Yeah.
It's a measurement tool, like the Fibonacci.
Yeah.
It's
I've
just a measurement tool.
heard of the fib before, but niggas don't be using all the like you don't use all the numbers either. You just use the 50%.
That's
So
all you need, fifty
okay.
percent.
I never seen how to
Because the
use the
50%.
full thing.
Okay, you really don't need all those other numbers because
Okay.
you know what I'm saying. All you need is the 50%. It's like the middle of the range
Okay.
from the low, from swing low to swing high. It's like where do we come from? Where do we come from? Where the price, where did it go to? It went to a premium high. So anything below 50%, we consider that a discount market. So on a smaller time frame, we searching for, buys. After accumulation is done, you see what I'm saying?
Mm-hmm.
See this right here at the top left? After accumulation is done,
Break
we
out.
are trying to catch them buys right there. Boom, we're trying to catch them buys right there. Same thing with
Mm-hmm.
price. So you want to, we buying at a discount. So if you're not sure like where you at as far as price action, you either can look at it with your eye. You see where we started from, and you see where it went to. You can look at it with your eyes, or if you need help, you can use the Fibonacci tool to help guide you. You know what I'm saying? Because the trading range is gonna constantly change from swing low to swing high. You know what I'm saying? It's going back and forth. So every time frame has its own premium and discount.
Mm-hmm.
So once price breaks above that 50%, you know you still can buy in a premium only if it's accumulating to continue trending going higher.
Right.
But once price breaks above that 50%, now we in premium prices now. So you got to be careful. Like you can still buy in a premium, but you got to be careful though, because the real move eventually is gonna be that sale. So say you see this little red counter right here in the
Yeah.
middle.
Yeah.
Say it's accumulating right here at this red candlestick to go higher, and you see it just kept trending. Okay, you can
Mm-hmm.
do that. You can ride the wave. You can ride the trend is your friend until the reverse on you. So you got to keep in mind that price is expensive right now. I mean, you know what I'm saying? Keep that buy short because the real move that you're waiting for is that premium sale on a
Right.
smaller time frame. Because you see what we bought up from. That TV was $200 down here. Right now, it's like 50K at the top up here. You see what I'm saying? So it's all
Mm-hmm.
about knowing where you at as far as price action on the chart. That's key. They don't teach you that. So let me try to clean this up so you won't go blind. All right. So you can delete that field. We know where we at. We know where price came from. We know
Mm-hmm.
where it went to. So same thing. So when I draw it out again, this is accumulation at a premium high. This is how it's gonna look on a smaller time frame. I mean, price is fractal. You know what I'm saying? What you see on the monthly or the daily, 4 hour, 1 hour, is what you're gonna see on the smaller time frames. You see what I'm saying? You understand that?
Yep.
So you see this right here, boom. All we trying to do is follow big money. They can't hide from us. You see what I'm saying? If we know prices at a discount, we waiting for this buy. We waiting for this reversal. It's just gonna take time. You gotta let it build up. So I just let it go sideways. Once it's done accumulating for 30 minutes or an hour or two or 15 minutes, I'm waiting. I'm catching this expansion on a smaller time frame. And I just got to be right for 3 minutes on pocket options. Same thing for the premium sale. The same thing that I did for the how long I waited for that buy. I'm
Mm-hmm.
waiting for the sale too up here at this on a smaller time frame. So I'm letting it build up, chop, 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 let it chop, let it, because they have to trap as they trying to get as many people as they can on the wrong side of the move. So you see this premium high right here. What's this above highs?
That's a buy side liquidity or sell side. Buy
Yeah.
side.
Or you can just say money. You can keep it simple and say money.
Okay.
You know what I'm saying? But that's right. You right. See that dollar sign? Boom. Same thing. What's this below lows? Protect the stop losses and what else?
Money.
Just a bunch of what?
A
Yep.
bunch of money.
So the algorithm is coded. It's for the people that's buying down here, they better take profit because guess what? Eventually, once big money take enough profit and they take price to a higher premium, what they doing? They gonna, what I'm saying, all of they unload their shares and they're gonna take price down to a what?
Discount.
To a cheaper price. Yep.
Hmm.
So it's like they're wiping the board. So all these people down here that's buying, they better take profit. You know what I'm saying? They buying off the trend line. You see how many times they touch? One, two, three, four. They better take profit because eventually prices, big money gonna take price back down to your entry. Because you got to think like they wipe the board. They wipe the board. They buying price up just to sell it back with, just to
Where it
sell it
came
back
from.
down. So it's like
Mm,
you want to follow it. You see what I'm saying?
but
So same thing. We're gonna let it build up. Once they satisfied accumulating, trapping enough buyers at this high or on this one candlestick right here, getting everybody to jump in. Once they satisfied, they gonna yank that bit down and take it down into the intended direction. So all these people that's selling that, they sell at double tops, don't they? Triple tops, that little pattern.
yeah, I heard of that.
Everybody selling up here, they right. They are not wrong. They just want patient, wait enough for big money to get in. Because big money, they gonna show themselves on the chart and then they gonna take price down. So that's why I'd be like, you gotta sit on your hands and wait. I'd be emphasizing that. You gotta wait.
Hmm.
So let me show you this. Oh, do you understand the gaps?
Yes, I do understand gaps. I just don't know. So I've heard that every time a gap is touched, that's how much more valid it is. Is that
Yeah.
true? Okay.
Now, with gaps got to get filled in. Gaps have to get filled in. It's like wind though. So we never know when it's gonna get filled in, but we know that area got to get filled in eventually. It's like wind though. So you see all these little open areas. Each candlestick got to get filled in fairly on these gaps to make the market efficient. You see what I mean by that? Like, it's sell down. The next candle to the right, it's sell down. Each candlestick got to get traded into fairly or wicked into.
Okay.
See how this sailed off, took down
Hmm.
and sailed right here. It left a little gap. Zooming in so you can see it. See
Hmm.
this little area.
Hmm.
So the candlestick to the right, it should offer buyers into this red candlestick to the left to make it efficient. You see what I'm saying? It should have did that. It didn't. See that
Okay.
little wick right there? It didn't wick
Yep.
it to it. So the algorithm likes to offer price fairly on both sides. But if it leaves a gap like this, eventually it's gonna fill it in because it don't like leaving gaps, in the market. So you see how it just whipped into it.
Yep.
Let me switch it out a little bit. You see that little whip? You see it clinging up. It
Hmm.
offer now it's like that's what I'm saying. We offer buyers into this area. We let enough people, get in and then price. So this area is efficient now. What I
Mm.
mean by efficient meaning healthy price action. So prices in a premium in this whole area, you see as trying to, all this price action is efficient. So it's, it should stay intact. It's efficient delivery. And you see how it's just dropping.
Yep.
Because it was expensive. That TV was like 50K up here.
Hmm.
It's losing value now. It's losing value. And then what is this right? See these open gaps right here?
Yep.
This is like one whole candlestick like this right here, but they broken in half. So it's like small little gaps in between, all three of these candlesticks.
Hmm.
Eventually it's gonna get filled in the future. It's like wind though. So if I stretch this out, I just stretch it out like this. You see how these filling it in?
Yep.
Now it's like the algorithm is we have offered we have offered sellers into these candlesticks right here. So this area is efficient now. Now, big
Okay.
money, they can take, you see all these little short term highs. Let me just do it like this. Let me just show you this right here. You see all these short term highs as it's going down
Mm-hmm.
that they didn't lift. Eventually, they're gonna come back and get that later. It's like wind though. You see what I'm saying? Because you remember like big money wiped the board. See these dollar signs? They wiped the board. Boom. It's just a bunch of stop losses up here. Buy side liquidity. Keep it simple and just say money.
Mm-hmm.
So when big money, you know what I'm saying, they engineering liquidity, like giving you something to go off of, like as far as price action. Eventually, once they wipe the board, they're gonna come and get all this back later. It's like wind though. So when
Mm-hmm.
it drop down to a discount, they're gonna come back and get all this later. Let me zoom it out. Let me show you this right here. You see this whole, what is this whole area?
Consolidation.
So you see, all right, see where we came from up here at this top left.
Yep.
It, what was price currently at up here at this high? It
So
was at a
where was it
premium
at?
one.
Yeah,
You
is that
see,
a
how
premium
what did it drop down to a deeper what?
discount?
Yeah, yeah, we was at a premium at this high, and it was dropping all the way down to a cheaper wood, to a deep wood, deeper wood.
Price.
See
Discount?
where we came
All
from?
right.
Hmm.
I say, am I
What we
right?
dropped down to? Yeah, we dropped down to a discount price. So after a strong, yeah, you're right, you're right. So after a strong decline like this, it's gonna take a while for price to build back up. You see what I'm saying?
Yeah.
It's gonna take a while for it to build back up. Chop, 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 chop. So you can't be quick to press the button on pocket options. You see what I'm saying? Let it
Right.
build up. We know the price it's gonna go higher, but it has to build up first. What I mean by that, it has to accumulate. They got to let all us come in the market because we are retail traders. You see what I'm saying? So we are consolidation. You see what I'm saying?
Mm-hmm.
So you got to build up. It might take an hour or two. It might take 3 hours to build up just to go sideways. But once it's done accumulating, what is this right here? Manipulation.
Yep. And distribution.
We're gonna get that little fake out and we're gonna get that distribution. So you already know what time it is. We're gonna get that distribution. Boom. This is what we're trying to catch on pocket options. So that's what you have to do. You have to sit in your hands. You got to wait and be patient. Let it build up. We're not wrong. We're not wrong. So it's like big money. They saying it's like big money saying if you. So they gonna let you get in right here. You know what I'm saying? They gonna let you get in. They saying if you. But once big money taking up, profit at that discount, get you on the wrong side of the move, and then they gonna take price into the intended direction. Cause you it's like you gotta look left. You gotta look left where the money is. As it's all as you see all this price action forming up, you gotta look left what gaps you see, where the money is. It, where the money sits above highs and lows. If price ran out all the low side, the low side of liquidity, took all the lows out, where all the money at now? At the high side now. What gaps do you see right here? what's this above highest? They buying it up just to sell it. You see what I'm saying? So like, you see what I'm saying? We trying to follow their footsteps. They can't hide from us. You see what I'm saying? So right here again, we got reaccumulation right here. We got reaccumulation,
So how do you know how far to draw
and
your
then once,
accumulation? Like,
hmm,
do you draw it all the way across the chart, or do you do it with the price action that's right? That's in the present. As far as
say that again.
how do you draw your boxes? Do you use it all the way across the chart, or do you use it at the present price action?
Like yeah, like the present. Yeah, it just depends on how that accumulation look. Like all this was accumulation. It ain't gonna be perfect every time. Like all this was all this was reaccumulation.
Okay.
This whole area right here,
Yeah, I see it.
that's all reaccumulation. They like, trying to get people confused. Like,
Right. They confuse the shit out
People
of
thought
me.
it
I
was
tell you
for
that.
accumulating to go down. Yeah. Uh-huh. That's what they trying to do. They trying to get everybody, get as many people as they can on the wrong side of the move, like selling, and then get you chopped up, and then boom, there it go. You see what I'm
Hmm.
saying? And if you see price like this going sideways for like an hour or two, this move is gonna be strong when it breaks out of accumulation. You see what I'm saying?
Hmm.
It's gonna be explosive. So
Hmm.
this is how the algorithm. This is how it's moving. It's accumulating to go up. If we at a discount, or it's accumulating to go down if it's ready to break down. You see what I'm saying?
Yep.
So it's your job every day to what I'm saying, go back into your charts and investigate these areas. But you're using premium and discount to help guide you on what accumulation you should wait for. You see what I'm saying? All right, let's go to pocket options now. All right, all right. You got some more questions? What you want me to? Was
Um.
that some? Did you understand those? That breakdown,
Yeah, I understood it.
like as far as premium and discount gaps and
Yep.
accumulation.
Yep.
Now you can ask me whatever questions, but
Okay. So, do
let
you
me see
start?
this
You
right
start
here.
off on the hour, or do you start off on a daily or something like that? Or H4. You talk. You talking? I can't hear you if you are. Yeah, I don't hear you. I don't know what happened.